Hello, welcome to today's Market Snapshot with myself, Jasper Lawler, the Senior Market Analyst here at LCG. Today it's been all about inflation. We've had data from China, Germany and the UK. It's the UK where I want to focus today, just because that's where some of the expectations have been the most pronounced. So because of the drop in the pound, the outlook for inflation is a little steeper than some other parts of the world, but there is a general trend higher in inflation, and that's what the data today has shown. Inflation rising over the last month, quite significantly in China, also in Germany, also in the UK. So we're looking at 1.8% year over year inflation in the UK now, but that was just slightly below expectations of 1.9%. And so the result is that we've seen a bit of a sell-off in the British pound. And again, it's just because the drop in the currency just means inflation expectations are a bit more elevated over the Eurozone, over the US, barring any fiscal measures from Donald Trump, but purely on that currency drop. So we haven't really seen the effect of the fall in the pound come through into consumer prices yet, but we can see it in the pipeline. PPI, for example, rising 1.7% month over month. That's just a monthly rise. So you can see that annually PPI, that's producer prices going into the inputs, are rising a lot. So we're going to have a quick look at the chart for the euro against the British pound now and see what the ramifications of this inflation data is in the context of the overall trend. So this is the weekly chart for the euro British pound pair. What you can see is the moving averages lined up pretty nicely, indicating an uptrend. But we've stalled a little bit. We hit those highs around just short of 93, and you can see that we've, in very simplistic terms, put in a lower high. So the risk is now that we break through this support, which comes in at around 83.40-ish. Really, the 83 mark is the big round number involved. A drop through there could carry us all the way down to this support down here around 0.76. So that's the risks we're facing. We're down through the weekly 20 period moving average. So there's a chance we go and test the 50 again. Dropping down to the daily chart, you can see that we're right down near a fairly significant area of support. This 0.8450 really is what we're dealing with. That's been holding since the start of February. Since the start of January even, and we're getting a rebound off there today. So that's the euro strengthening against the pound because of the relatively disappointing UK inflation data. So if this support holds, what we perhaps will be looking for in terms of some confirmation would be a little push beyond those moving averages on the daily time frame and beyond this little this area of resistance here, which comes in, I would say, around the sort of 0.8550, so 100 pips plus from the lows. A push through there in the short term, which we can probably see better on a 4-hour chart, could indicate that we're pushing above this short-term, longer period moving average and push back up to these highs around 86.30. So that's what we could be setting up for in terms of this data changing the outlook somewhat for inflation for the UK. Basically because the Bank of England may not be so in a desperate mood to raise interest rates to combat this rise in inflation. That's it for this market snapshot today. The summary is that we were just looking at inflation. The UK inflation slightly missed expectations, and we're looking at a push higher in euro pound. And we want to see if we can take out this short-term resistance, maybe to indicate that the trend in the short term has shifted to the upside.